Welcome, I'm Mark Todd from the NAB, and today I'm in the Charter Hall offices of the Charter Hall Long WALE REIT. I have the fund manager, Avi Anger, here to chat about property markets, chat about the Long WALE REIT, chat about what he thinks about cash and funding and how they make all the money. And let's start with you, Avi. The Charter Hall Long WALE REIT, tell everyone about it. For those who don't know who it is, what is it?
Sure. Look, the Charter Hall Long WALE REIT, the aim of the REIT is to provide investors with income and capital growth year on year through an exposure to long leased high quality properties leased to high quality tenants. The REIT as it sits today has about 1.9 billion of assets. The market cap's about 1.2 billion, and we have assets across office, industrial, single tenant, long lease retail, and our recently acquired Ingham's portfolio gives us an exposure also to agri-logistics.
The performance has been very good
since
the
performance has been good.
And you've got the half year coming up now. So can you give everyone a sense of why it has performed as well as it has? Because there were some challenging times when it came to market.
Yeah, look, I'll give you a snapshot, Mark, of the half year results and the performance to date and then how I see things going forward. So our half year results was very positive. We delivered 12.9 cents per security for the half, and we're on target to deliver our guidance of 26.8 to 26.9 cents per security for the full year. And that's an increase of between 1.5% and 2% over last year. Our WALE, our weighted average lease expiry across our portfolio at 31 December, sits at 12.6 years. It was 10.8 in June.
Right.
We've worked on extending existing leases and also through acquisition to increase that WALE today to 12.6 years, which is higher than it was at the time of our IPO in November 2016. We also have had a very busy half. We've acquired over 500 million of property to grow and diversify the REIT, and we've disposed of about 175 million of property. Our debt's pretty conservative. It's about 31.5% balance sheet gearing, which is in the middle of our target range. And our weighted average cost of debt sits at about 4.1%, and our interest rates are locked in for 5 years.
Which is a big driver in a way people think about the REITs, isn't it?
Yeah.
About how they think about the funding and the like. One of the concerns they've got is, I guess, property is absolutely everywhere. Everyone's talking about property. What's your sense of the property market as it relates to your business today?
Well, look, we have, in terms of our property, first of all, the property market, we don't do residential, so I can't comment on the residential markets, but the commercial markets are very strong. There's very strong tenant demand, particularly in Sydney, in the East Coast markets, Sydney, Melbourne and Brisbane as well, and a lot of buyer demand as well, and it has been for a number of years, which has pushed prices up. We're very fortunate. I think we've got a very high quality portfolio that's very resilient. Our leases are long term, as I mentioned earlier, which means we have very little expiry coming up in the next few years. We have high quality tenants, the likes of Woolworths, Commonwealth Government, Westpac, Coles. So our tenant register is very high quality, and they always pay the rent on time. We never have any issues with our tenants, and they all operate in industries that are sort of non-discretionary. So they're not impacted significantly by changes in consumer spending patterns, for example, in fashion. So we don't have any exposure to tenants like that. Yeah. So I think we're very well placed, both for current times, which I think are quite strong, and also if things change, I think we're very well placed given the long dated nature of our leases, the fact that all our leases have rental increases built into them, so the rent goes up every year, and the high quality nature of our tenants.
So I think when people try and assess a REIT, they think about the point you're making, which is the tenancy, what's the likelihood of them paying to the quality of the tenancy. They think about the, if you like, the debt profile in terms of longer term, with rates going up, how would it be? And I remember people were talking about a higher rates, let's say a year ago. Now they don't think that way. As an investor, what would you ask me to look for? What's the key metrics I need to check on if I'm thinking now about a REIT, particularly your REIT?
Yeah, well, I think the market that we want to cater with this REIT is investors that are looking for stable and secure income over the long term that's growing year on year, and also high quality properties that have the potential to also deliver capital growth over the long term. So they're sort of the characteristics of what we're trying to achieve, and I think we do that through the nature of our tenants, very high quality. We look for good quality properties that are strategic to the tenant's business and important for their operations. well located, preferably, and able to be used, if not for that tenant, for other people in the future. Rent increases in the leases, as I mentioned earlier. Our debt's locked in for a long period of time. As I mentioned, our interest rates are locked in for the next 5 years. So really take out any aspects of sort of risk that might exist.
So is the one risk that, as you thinking this through, is it about the acquisition risk? Is it a challenge for you right now, or is the Charter Hall platform so strong that you can find products, that you can find properties that suit that profile? Is that hard at the moment?
Look, we have 1.9 billion of property that's very well diversified, which really, again, reduces risk for investors. And yes, we'd like to grow that portfolio over time if we can find opportunities that make sense for our investors. There's no obligation to grow. We don't, I think we're a good size, but we can continue to grow. We do benefit from the Charter Hall machine. So we have 23 billion across the Charter Hall group of funds under management, and a large transactions team that's dedicated to finding product for our suite of funds across the business. We source a lot of our product off market, so deals that aren't available to people that might be looking around in the market. And I think with the experience and contacts of that team and the business as a whole really allows for an advantage in securing product for my fund and other funds of the business.
Great. Well, congratulations on having a great half year, and I thank you for taking the time to chat with me. I think it's been fascinating to understand what that performance has been like in that. And I think you're right. If people want, everyone in their portfolio needs to have a reason to have an asset in it, and you've articulated what that might be.
Thanks, Mark. Thanks for having me along.
That's Avi Anger. He's the fund manager for the Charter Hall Long WALE REIT. I'm Mark Todd from the NAB. Hope you've enjoyed the video.